As I was not very structured, I came to the university in Frankfurt actually and said, I would like to study, I have my high school diploma, but I was too late to register. And they said, but there's always, every year there is a lottery. And then they just give you a topic and you study this one. And so they came up and said, oh, it's economics. I said, oh, great. It's 1991. First country I had to go to Costa Rica. On that Sunday, first Sunday actually, I went to a taxi driver and said, bring me please to the poorest part of San Jose just to learn, just listening to the people on the ground. It's all about the opportunity. Creating that opportunity for somebody who doesn't have an opportunity makes all the difference. What can we contribute? And that's also in the name of the company, responsAbility. What can we do that people can use this access to opportunities? Here I'm talking about financial sector, access to energy, clean energy, access to healthcare. There are many of these things. That is where in emerging market, I think the core impact basically happens. We cannot change the world basically. But can we contribute? That is the question which we are asking. And what we do with our product offering is this to make it also accessible for investors here, that these topics are also accessible and where the funding can contribute in the right direction.
Rochus, thanks for coming on the show today.
Thank you.
I want to start by setting up a backdrop of your journey to becoming an impact investor who was involved in microfinance in the emerging markets in really its earliest days. And I want to do this for listeners who don't know you. So could you please describe your childhood? I'd like you also to talk about your parents, maybe, and family discussions and any other formative experiences you had growing up that might have influenced you to work essentially all of your career in impact investing, and starting from a time when impact investing wasn't really a thing. And I'm doing this just to give us a bit of color so we get a good idea from where you have come in your journey to impact investing.
I live in Switzerland now since 28 years, but I'm German originally. So I'm coming from the area of Cologne in Germany. Without going to, of course, growing up there, going to school locally, countryside, not city, really countryside, small villages, passing then also through a couple of years boarding school. But what I want to say is, and very often people ask me kind of, how did you come to it? How did you make it into impact? And how did it all come together? I have to say, to be very honest and very, very frank, it was not strategically. That was not the type of thinking. Very often, it's not I would say, very often now when we employ people in the company and I talk to them or they ask me questions, I'm very astonished how strategic they are thinking already at a very young age, about their career and so. I'm not that type of person. I will not say it happened basically by incident or, came together, but yes, and I can share a little bit the important steps on that journey, how it actually happened. But on my side, it's driven by curiosity, and then sometimes opportunity in life show up. And then the big question is, I think for me personally, it is, do you say yes or no to the opportunity? And, you can say, no, there's an opportunity, but I don't take this, I don't go into that direction. And I very often, because I'm curious and interested in certain things. And even when, there are moments where you think, but are you equipped for doing a certain thing? Are you actually prepared for doing this? I like also say, hey, why not? Let's go into this and see how it develops. In brief, look, I'm, coming from the area of Cologne, but when I passed high school and, for a couple of years, I honestly speaking didn't know really what to do professionally. To be very frank, and I did different types of small jobs, even going for a year to France and helping out, and just in the countryside. And so because I was not so clear, but I decided then, okay, I would like to study. And it's a bit funny, and I should probably not say, because that's not a good example for many people, because at that time in Germany, when you come very late, when you come late, typically university at that time starts, or even today in October it starts. And as I was not very structured, so I came to the university in Frankfurt actually and said, I would like to study, I have my high school diploma, but I was too late to register because the registration already happens in March. And so I went there and they said, but there's always, every year there is a lottery. You can apply for this. And then they just give you a topic and you study this one. this was just the leftovers. When some people got allocated and they didn't show up, and then they say, okay, we have this place to study. They came up and said, oh, it's economics. I said, oh, great. I study economics. It's to say, I studied economics in Frankfurt. Then, I got a bit, I have to say, I always liked mathematics. Then I started to do mathematics in parallel, and I moved from Frankfurt to Berlin. And this was let me really say, I'm talking Berlin before basically the war came. I'm a bit older, so I'm talking mid-80s. And of course, it was from that perspective then also, very exciting time. And I finished my studies around 88, 89 in Berlin in economics. And again, I was confronted with the situation now, okay, but what am I going to do now? Because, I came to this basically by incident, so it was just a lottery, so to say. And I liked the topic. And so, but I was not very strategic about this. And then, I got offered a job at the university in Frankfurt because I was working together with a professor I was a student from a professor in Berlin. And he basically got his first professorship in Frankfurt. And he asked me, can I, you want to be my assistant? And so I went with him back to Frankfurt and started as a, so to say, how do you say that in English? I think scientific support to the professor, and in mind doing, probably a doctoral PhD at that point in time. And by coincidence, there again, this professor was working for a very small German consultancy company. And this consultancy company was, in a nutshell, in today's terminology, we would say it was basically financial sector development, what they were doing in emerging markets. And so it came, I stop here for the moment, but so it came that I came into contact with the topic because, yes, of course, during my studies, I'm talking mid-80s. These type of topics, of course, were also part of the curriculum. You got exposure to topics with regard to development economics. What later developed, the involvement of the private sector and now what is known as impact investment was not even coined the term was not coined at that point in time. So that was in a very short, coming from basically curious student and happened to be educated in economics. And this, of course, was when these opportunities came up for me, very useful because I'm doing investments and investment has to, it's not a bad thing when you have some understanding on finance and not a bad thing when you have some understanding on macroeconomics and these type of things, because they are also, of course, very relevant for the investments which we do.
Now I have the episode title. It's Rochus Wins the Lottery.
So to say, yes. And and I'm saying lottery. In reality, it is kind of, they did they just took it out and they say, okay, this place is available. Do you want to do it? I said, yes. Why not? And I said, why I can do this.
You mentioned that you went to boarding school. Is that a thing in Germany? That's not common, is it?
Not very common. It's actually driven by, I come from a family background, a Catholic. And again, here, look, there was just, in the region where my parents have been living, basically there was a new Catholic boarding school opened. Yeah. And goes a bit back, there is in the family a couple of people who, some generations before, one generation before, who also went to boarding school. And so I was curious, what is it actually? And yes, I have to admit, which just sounds a bit strange because I was 10 or I was 9 at that time. It was basically, like my parents never could have afforded the boarding school. This was a subsidized boarding school, where you basically could go there for free, I'm saying. It was not in the Catholic context, in the Christian context there. And it came up, at school, I'm not really made for the traditional school system. So to say, my scores was good. It was all fine. But, I'm one of these people, I would say, a bit of talent, on the mathematics side, that I'm good at this. I'm not so good at languages and writing. And so it was more complicated. And my teacher said, no, he cannot go to high school because we have this system in Germany, where you are very early on, you go on this track, on the other track.
Yeah, we have the same thing in Switzerland pretty early on.
My luck was because, to get into this boarding school, they do a test with you. Which type of school are you based? They would do a testing. And the testing, as you know, these tests have a very strong spin towards structures and mathematical thinking. my score came out very good because that was the thing I was quite good at this, but I was not so good at other things, but I was good at this. And then the recommendation was, oh yeah, fine. The kid is, can do this. And so I went a couple of years to that boarding school. And before then, around when I was 15, 16, I finished basically not at the boarding school. I finished basically in the area where my parents were living.
Then after that, you started in consulting, and it was likely this consulting company of this professor that you were doing.
It's a very interesting story because the professor had this contact to a company which is, it's still there in existence today. It's called today International Project Consulting or something like that. And this company was specialized. I'm talking in the 80s. I'm talking really the 80s. This company were really specialized in what we call financial sector development. And then at that time, I'm talking the early days of what later has been known microfinance. Microfinance was basically a subsidized activity, subsidized by public sector players. So the German government, the Swiss government, the Inter-American Development, the World Bank. But at that point in time, the real discussion was, okay, now, can it be also a profitable activity or should it be a profitable activity? So all these questions were very fundamental discussions on, for example, is it okay to do business with poor people? That was so to say, a really conceptual question at that point in time. They said, okay, we are doing this now since 10 years, they were doing this. They were typically, their instrument, which they used was, if I was running at that point in time, these were non-government organizations, NGOs, and they were extending loans to micro entrepreneurs. The typical package was you got $500,000 at 40 years a loan at 40 years in local currency at 1% interest rate. So it was a subsidy because, basically for 40 years at 1%. So basically there was no payback at the end. And you got $100,000 technical assistance back, support for the institution. And they have been doing this all over Latin America for many years. And then they said, now we want to do a study. We want to do an evaluation of the program. And the consultancy company in Germany got actually that contract. And then they were looking for people who were interested to travel around Latin America for 6 months and to evaluate the whole program. I mean, the whole thing. And we did analysis of 40 institutions in 6 months, a team. And the person running the consultancy company asked me, my professor told me that this is an opportunity and they are looking for people. I hardly could speak Spanish. I did some Spanish learning myself at home, but I was not familiar. And it was all in Latin America. And so I met the people from the consultancy company. I said, look, guys, I'm interested. My Spanish is very poor, but I'm interested. They said, no, don't worry. You will learn Spanish very quickly in a couple of weeks when you are on site. And so I accepted the job for 6 months and basically ended up working for the consultancy company around, I can't remember, 5 years. And the interesting thing was, if I may say so, because this study never has been published, because when we finished the study, and it was a team, it was not me alone, a team was working on this. I thought we were a number of people. The results were devastating. The results were, we analyzed 40 companies. And out of the 40 companies, there was only one single company who was, after a number of years, capable to cover costs. Everybody was losing money. These days, today, we are talking about sustainability. So at that point, we of course already were talking about sustainability, but one aspect of sustainability was, and still is, of course, financial sustainability. I mean, if you have something which is not financially sustainable, it
doesn't matter what you're doing.
And the frustrating thing at that point in time was, yes, they were running this program, but unfortunately, it was not designed to bring these companies to a financial sustainable level. And that was a very important, it was a tough message. And from there, the whole discussion on how to deliver financial sector services in a more commercial approach with poor people or with micro enterprises or micro entrepreneurs, though these people are the poorest in these countries or belong to the group of the really poor people in these countries, but to build a sustainable relationship so that these people don't have just access once to financial services, they can access on a sustainable level. That was a challenge at that point in time. And so I came into the topic, and so I stayed working as a consultant for a number of years with a lot of projects around Latin America, but also in Asia, because the consultancy company at that point in time did two things. One is trying to work with financial intermediaries at that time, basically in Latin America, so that they could offer more adapted, better financial services to these people, to micro entrepreneurs, but they do it on a sustainable level, also financially sustainable. That was one category of work where I have been quite a bit of involved there in a variety of countries. And the other work is regulatory work. And regulatory work, I mean, because when you, at that point in time, and now it's slightly different today, but when you at that point in time, you wanted to establish a financial sector institution, let's say in Peru, in Bolivia, in Colombia, in these countries, the regulation was not made to allow smaller players to enter into the regulated financial sector. But being a regulated entity when you do financial services is super important, because when you are non-regulated, of course, you never can take deposits. So you only can do credit, which is, or payments, which is a different thing. But when you really want to develop a fully fledged, broad financial services, it's super important. You can get into the formal financial sector, but that needed changes to the financial sector laws in the countries. And so the company was specialized in assisting central banks, supervisory agencies in developing adequate financial sector development legal frameworks. And that was the part where I got deeply involved into what it structurally means, what are the key elements, so that what we call in today's terminology already, that enabling environment. How can you create an environment that entrepreneurs, people who want to build something, can actually build it? And this is a basis then for later having also investment opportunities, because when these companies do not evolve, there's also no investment opportunity.
Was this to establish the regulatory framework in these countries to set up microfinance institutions, which didn't exist before, in a way that they could take investment in?
I give you an example, and the example which is probably a very well or better known, though at that point in time, I'm talking Latin America. Bangladesh, Indonesia have slightly different stories, but actually the front runner when it comes to formal financial sector inclusion, formal financial sector institution, Latin America was the front runner there. All the institutions we were analyzing when we did our job, the consultancy, they were all NGOs. They were unregulated financial sector players, in the term semi-formal. There was a company, it was an NGO, an association, a foundation, and the foundation was doing the job, but they were not supervised by the regulators because they were not in the formal sector. Now, when you have such a company and you want to be part of the formal financial sector, you have to play to the rules. But you can imagine, I give you just a simple example also for everybody, listening to this to really understand what we are talking about. At that point in time, you want to establish a bank in, let's say, in Bolivia or in Peru, but it could well be that the minimum capital you needed was, and I'm inventing, I can't remember, $25 million, let's say. You need $25 million to establish a bank, because otherwise the regulator would say, no, it's not serious, it's too small, and you cannot. So basically, one of the key elements was kind of, okay, here is an institution which probably can come up with $4 or $5 million US, and they can enter the financial sector as a small entity. But this needed a change in the laws, because the laws didn't allow for this type of, let's say, development from below. That's what we wanted to achieve. And so we had then to work with the regulators to say, look, you can do this, but then this triggered quite a bit of changes in other regulations so that the regulator felt comfortable that they can also regulate this entity, because they had also to supervise these entities. And the regulators are, of course, with good reasons, they are very hesitant of doing these type of things, because they say, if things go wrong, we have a big problem in the country, because this is financial sector, and financial sector builds on trust and confidence. We have to make sure that things are very well done. And so we try to assist the regulator, in these countries to say, look, there is a way of doing it, but you have then to change quite a number of laws, decrees, whatever it was in these countries, to allow these players to step by step convert from a non-regulated into a regulated entity. And the first one in Latin America, which did this step, was actually an institution which still exists today. It's Banco Sol in Bolivia. At that point in time, it was an institution in Bolivia. They got the approvals from the government. Actually, it was a project I have been working on together with others to develop this. And then this was the first one which developed. Parallel to this, some neighboring countries had, slightly different approach. Also, this consultancy company was also assisting very strongly Peru. It's not so well known these days when people talk about microfinance, they would talk about many people who are not so close to these developments. They would know Bangladesh Grameen Bank. Actually, bank for a long time, it was not a bank. It has the name bank. It was not a bank, but now it is. But at that time, it was not. Or they have examples in Indonesia, which were early on there. But in Latin America, it's typically Bolivia, which stands out. And it is Peru, because the Peruvian regulation allowed for establishing, again, with the assistance from Germany, they copied what in Germany is known as a Sparkassen system. So these are institutions which belong to cities. And so they copied the system. And therefore we have in Peru today, it's actually worldwide, I still would say it's one of the largest microfinance initiatives which ever happened globally. And it's called the system of cajas municipales, which means these are the savings institution belonging to the cities in Peru.
So this was in the 90s or in the 80s?
When did it all happen? Look, I started for the consultancy company early 90s, and this happened in the first 5 years of the 90s. So I think the laws and decrees in Bolivia have been passed 93, 94, around this time. And that was a moment where something interesting actually, happened. There was 10 years earlier, many people who would have said, no, you are doing business with poor people, but poor people should be supported. And it's not a business partner. People on the ground, and we can come to this. I think it's a very interesting topic. They look at it, they want to be a partner. It's all about creating the opportunity for these people. And so, of course, when people with let's say from developed countries might, and still today, they look into this and say, how on earth are you doing business? Are you even charging high interest rate to these people? They are paying much higher interest rate than in a developed country. We can explain why this is the case. This should not be the case. But what happened end of the 80s, beginning of the 90s is that this mindset started to develop where people understood, of course, it is not good to have very high interest rate. Everybody agrees. This is clear. But it's also not good when the provision of these financial services has to be subsidized, because when it's subsidized, it is just not sustainable. So we have to find a way in the middle where we can offer the services. We create opportunities for people on the ground, and actually we work on providing these services more efficient so that the interest rate also comes down. That was the moment in the 90s where people understood, okay, there is a business model. And this business model actually, when we develop this carefully with a market development and there's competition, it will lead us to these results. And that what basically happened in the 90s across many countries in Latin America. And then for various reasons, and one development is Eastern Europe. Why Eastern Europe? Because when the wall came down, 89, in the 90s, all these financial sectors in Eastern Europe had to be redeveloped. And a lot of the lessons learned in the 80s and early 90s have been also taken to Eastern European countries. They did it slightly different in many countries, but the idea was similar. Let's develop financial sector institutions with certain criteria. And then came also a whole driven by the people, the World Bank and others and the bilateral cooperation, the German government but many governments, Swiss government, many governments say, okay, let's implement these enabling frameworks also in Africa. It has been done. I have myself involved in many countries there in Africa. Let's also implement it in some Asian countries. Pakistan, for example, is a case where the Swiss government was very active and they got this. Even, for example, a country, and it's very tough to say that even a country like Yemen has now, unfortunately, it's nearly fully destroyed. But, the country has a financial sector set up which allows these type of developments provided by technical assistance. And in India, we saw, of course, then, that the idea of these microfinance or small lending practices, and India has, was taken up. There, the history in India is slightly different, but was taken up by a large range of, very, like many, I would say, bright and also, good Indians who got training in the United States and came back and wanted to develop India. And so in India, it took a slightly different way, but it also developed over the coming years.
In the early 2000s, 3 Swiss guys, Leo Bachler and Armin Williger and Klaus Tischhauser, they decided to form responsAbility with a focus on financial inclusion, not in Latin America, but in Africa. And you, Rochus, became part of their original team. And everyone only thinks that Switzerland only has developed chocolate, cheese, and watches.
We are also quite known for microfinance or funds and players. But yeah, you are right. Chocolate is much more famous and watches.
What's the timeline or series of events that leads you from consulting with governments to joining this startup? What was your interest at that point? And I know we're still covering early chapters in your career, but I really like looking at these things closely because it shows the development that you went through and also because these were very early days of impact and this was far from a sure thing. And I think that makes, at least for me, a fascinating study because people get to see how you got to the point where you could build success on top of success in the field. And it wasn't just a straight line out of your boarding school to university to responsAbilities. So how did you get to responsAbility and what were you doing there with them?
The situation was the following because I was, as I said, beginning 90s to the mid 90s, roughly. I was working for the consultancy company. I found it also so interesting. I don't complain about it, but we really worked hard and basically we just continued working because it was so interesting. And I learned a lot of things. It was actually in each, at that time when we say in each mission where we went to a country, I don't know, I visited 35 countries where I worked. So it was very interesting, and a lot of learnings. I'm still very thankful for this experience because you are on the ground, you see what works, what doesn't work, and you are asked to analyze the situation, conclude and say, how can we improve? That was my job, how can we do better? And so I learned a lot of this. But then I, basically for a number of years, I worked only on regulatory frameworks, not for the consultancy company, with 2 Bolivian friends of mine, which I knew through my project. And we really specialized only on regulatory frameworks was a topic where, but at that point in time, I mixed it because I got offered a job in Switzerland. Say, hey, somebody asked me, but Rochus, I was working as a consultant, but the consultancy was not always like it was 3 weeks here, 2 weeks there, not continuous. And I was saying, hey, we are also looking for somebody who can teach students in mathematics, I said, great. I can also, I like this because I like mathematics, And so it was a mix of things which I was doing. And then what happened was I was also working from time to time for the Swiss government or for some Swiss players in that field. And they do these conferences, and they invited me and said, Rochus, we do a conference. Could you give a talk? It was back in 2000, I think 1999, 2000 or 2001. And they said, can you give a talk about private sector investments into financial sector in emerging markets. So basically investments into microfinance. And I said, of course I can do that because I was building microfinance institutions as a consultant. So not only the regulatory frameworks, also we were working with institutions, building them up. And there were investments. I said, I can share what I know. And I gave that talk. And these people also invited Klaus Tischhauser and actually a second person who also co-founded the company responsAbility, Ivo Knöpfel. So they both came to the talk. I gave a presentation. And then they approached me and said, Rochus, look, we both are from the financial sector. They came from fund management, asset allocation, also doing already, Ivo is one of the pioneers of ESG investments. They had this concept in mind, but they say, what we are missing is we have no experience of doing investments in emerging markets with a specific, let's say, impact topic like microfinance. We have no experience. We need somebody who has some experience. And I was doing it already for 10 years. And so they said, look, we are setting up the company. We have very little resources available. I said, look, okay, we found an agreement. I said, look, we basically do this for a very small fee, because I said, I can do some other consultancies where I cover my cost, my living. I understood there was no fund, there was nothing. And so I started basically then working. The company was founded. There were no fund, no assets. We started from scratch. They were knowledgeable about how to set up a fund. What does it mean regulatory wise? And so they did this part and said, but on the investment side, they said they were all building on me and said, Rose, tell us, what should we do? And then, they had contacted some partner institutions, some other players in the field who could bring some deals. But they said, we have no clue how to analyze a deal. Is it a good deal, a bad deal? What should we do? And my job was basically, if you want, so I was at that point in time, so the first investment officer of the company, because all the deals came to my desk and they asked me the question. So how do we assess this? And we did at the very beginning of the company when we started, and I can share a bit, it was in 2003 now, when the first fund was approved and we could do the first deals. Basically, we did for the first year, I would say at least, we did all deals assessments together so that they could learn. I trained everybody, it was only 4 or 5 people we were on the job. And okay, look, what is relevant when you look at this? And there we started like this.
What was your progression in the company? Because the company grew. And in 2016, you became the CEO of the company, but there's 13 years of time between this 2003 and 2016. How did your personal focus in the company change?
They started, and as we didn't have the resources, I said, look, but I had family, kids. I said, I have certain running costs. I need to cover these costs. I can't just say I do it for free. The very first years was that I said, okay, I continue to do some consultancy. And here, I basically, we try to get this done, and we don't talk about salaries. And so, we try to arrange, because it was very limited at the very beginning. Really, it took, when we founded, the company was founded, until we got the approval from the first fund. It's a long journey in itself, there was already one other fund out there, but it was not known to the regulators. And we wanted to have a retail license. And I come to the topic of retail. It's a very specific thing. There's, I think, very, very few, there are some, but very, very few similar players in the field who started on the retail side. Most people started more with, let's say, institutional investors or high net worth individuals or with some foundations. But we started really on the retail side. And therefore, it took quite a while. And we are now back in 2003, 2004, when we got the license. At the beginning, there was hardly any investor coming into the fund, because it was not known.
You're talking about the license from FINMA.
I'm talking about the license for the first product. We got a license as an asset manager. We got a license from FINMA, but then each product needs a license. And the first product, it took a while and it was only approved in 2003.
And let me just jump in here quickly for people who might not be familiar with the term FINMA. FINMA is the acronym for the Swiss government financial regulatory body. It's similar to the SEC in the United States or the FCA in the UK.
And then when the first product was there, then investors, they were able to start to invest into the topic. Because before, when you don't have a product, you have a license as an asset manager, but the investors cannot invest. So it took a while. And what happened then, to your question, is there's very interesting milestones in the history of the company. So it took, at the beginning, it didn't take off. It was very slow. Yeah. But there was certain elements which I think it's very often probably, in these type of things where things have to come together. And these elements were, of course, hey, people, there were great people, we were a bunch of great people kind of, but okay, you need also support by a market. There was the year of microfinance coming up. There was the media had an interest when the year of microfinance, they had an interest. Okay, what is this? Don't confuse. Today, people will say, oh, microfinance, we heard about it long time. But at that point in time, it was not a term where people here in Switzerland or somewhere, they were familiarized with this. No, they didn't know. And they could not even imagine that this is investable opportunity. And so certain things came together, and we had also very good luck because we partnered with a couple of banks here in Switzerland, and we got in specifically one bank, Credit Suisse, which now is UBS. We got a champion. We got a key person who really was also basically for us in promoting this product with their clients, very useful for us. And then the dynamic was it really took off. The growth started. And with that growth, interesting things happened because then, we were approached by other players and say, okay, but interesting. But can't we also have a fund for us, and we set up a second fund. And so in a nutshell, and here it's important, we are before financial sector crisis. We are not 2008, 2009. We are 2006. And those people who have been around 2006 will remember that people were very positive. The mindset was, whoa, we just move. And so in that dynamic, we were as a company, very small company with very limited, we were growing, we were starting to grow very fast. And where I also said, look, and now I leave all consultancy behind and I only dedicate time basically to the company because it was also feasible to do because we were growing assets.
And then in 2016, you actually became the chief executive officer. So tell me how that came about.
We were running the company and I joined my first position in the company when I formally, so to say, not as a consultant or trying to help out, really formally. There's a different story to this. We also, we started on the private debt side. So most of our funds do private debt investments. So we provide loans, let's say, to companies in emerging markets. But we also very early on saw the opportunity to do private equity investments. And as I have been doing some equity investments, so I started to be the head private equity of the company with a very small team. And so I have been building for a couple of years private equity practice of responsAbility. I joined around 2010. We formed, there was some change on the executive management. Klaus was there as CEO. And then we had another person, Christian, who was working on the private debt side. And basically we built an executive management team of 3 people, the CEO and somebody as a chief investment officer for debt and myself, the chief investment officer for equity or private equity. And when Klaus took the decision around 2015, I said, okay, he was doing this since 10 years that he wanted to move on because he had always planned to go sailing, he got into that. That was his idea. And he was very transparent. He always told the shareholders and the board members, look, the moment will come. Then the board of directors looked into this. Now, who should be the next CEO for the company? And then they selected myself and I accepted this. And so, okay, I was not, again, people say, but Rochus, be honest. And so I was not working in the company and one day I will be the CEO. And so it came up and I said, okay, that's a good opportunity. And so I took over as CEO and now I'm working in the position as CEO now already since 8-9 years.
Now that you say that story, I do remember getting an email from Klaus telling me that he was going sailing because I had contacted him
Yes.
I wrote a book a couple years ago, and I had wanted to interview him for that. And I got that message from him, which I didn't quite understand at the time. But basically, he said, like, no, he's sailing.
And he's still sailing. He's still
Is he? Yeah.
Yes, he's still sailing.
Maybe this is a good time to put a pin in this just for a moment before we start to really drill down on responsibility. And you can tell me what impact investing means to you personally, because many people are using this word. And I'm sure all of these experiences that we've been talking about gives you a unique perspective when you're working exclusively in the emerging markets, and it drives what you're doing with your life.
My very first consultancy, I don't know, it's 1991, at that time. My first job first country I had to go to Costa Rica. That was part of the 40 institution we had to cover, and it was Costa Rica. And I remember it was the first time I was out of Europe. My Spanish was very bad. I arrived there. We started to work. We worked the whole until Saturday. But there was a Sunday and I had off. And on that Sunday, first Sunday actually, I said, okay, if I have a bit of time, I went to a taxi driver and said, okay, please bring me to the poorest area. Actually, Costa Rica, outside of San Jose, Costa Rica is not the poorest country. But at that time, I'm talking back in 1991. I said, bring me please to the poorest part of San Jose. And he did that. He said, you should not go into this area because, there's a bit there. But I said, no, I want to go there. And I would like to ask people just to learn. And I went into this and I asked, it's Sunday, but these people work on Sundays, it's not, there's no Sunday, life continues. And I asked them, what does it mean for them? What is it actually? Just listening to the people on the ground. I personally have to say, I learned something, which was then, of course, I saw it many, many more times later. But at that point in time, it's all about the opportunity. I stick to this since today. I have to say, even in our vision statement here or in our purpose, it's creating that opportunity for somebody who doesn't have an opportunity makes all the difference. And I have this, you asked me on impact. For me, look, I know these days impact has developed and, there's SDG, there's all type of things out there. But when we come to, in simple words, let's say people who are really at the bottom, of the income pyramid, poorer people in these countries and the way they grow up, they are so limited very often opportunities. And it's not only financing, it is education, it's healthcare, it's many other things. There's no access to this. And I'm telling also still today, I'm telling people, investors here, don't forget, having an opportunity or not having makes all the difference for these people. What people do with the opportunity is a different thing. It's like in school, you teach 20 people and some people do great things and other people do less great, but having that opportunity, accessing and financing is as much as we can say financing is it, but financing for people who have so limited resources and say, okay, now I get this $200, $300 at that time. Today it's 500 or 1,000, but let's say that is very powerful. Now, it is also bad things can happen. All that type of things can happen. It's not without problem, but I'm saying, who am I sitting here, growing up in Germany, even going to a boarding school, having good education, who am I to say, but these people, it doesn't matter. No, it matters for them whether they have a new opportunity. And for me, when we talk about impact in emerging markets with regard to how can we include more people into the opportunities, it's all about this, which makes a big difference. And yes, we can then put many complicated metrics around this and do things. But ultimately, it's about creating these opportunities for me, for people. Of course, when we now talk about climate finance, there's other type of things which come into play. But in a nutshell, where I grew up with seeing the reality of these people on the ground and saying, okay, what can we contribute? And that's also in the name of the company, responsAbility. The A is about, there is ability on the ground. And we also, what can we do that people can use this access to opportunities? And I'm talking about financial sector. I can talk about access to energy, clean energy. I can talk about access to healthcare. I can talk, there are many of these things. That is where in emerging market, I think the core impact basically happens.
Thank you for that, because it's a word that everyone's using. And of course, it's the focus of what we're talking about today, but it's important to define what it means to you personally. Now I want to talk about responsibility. I did have a question. Were you there or in the room, or were you part of naming it since you were on the core team originally? Do you know about the development of the name responsAbility?
No, I was not in the room. Actually, the name was, so to say, invented by Klaus and Ivo. And Klaus always, he came also, he had a marketing background. He came, financial sector, and he had quite a strong side on the market. And it was kind of, putting this two things together. There is ability and there is a response. Can we respond to these abilities? That was the thinking. You can imagine because this capital A and responsAbility. So many people have been complaining about this, because when you typewrite it, it's always with an EI, it always makes it complicated. But that's where it comes from. That's the origin of the idea. And therefore, it's, still today, when we talk about purpose or vision, it's this. We envision a world where is access for all. There is this opportunity for all. That's what the company ultimately stands for, and where we try to contribute. We know we cannot do it alone. And we know we can only do a small part, but that's what we try to achieve.
So let's talk now about responsibility. And I'd like to start with the theory of change and the problem or the problems that you're trying to solve.
This is key. If you want a challenge, a problem, a limitation on the ground. So we see, I started working on the ground. I worked in nearly 50 countries, looking what is the topic on the ground. And we have now, of course, a lot of people who are who work and observe this. And from there, we say, okay, there is a problem. For example, access to finance, but there's another access to power. There are still 500, more than in Africa, more than 500 people, million people without any connection to the grid. So there is a topic. So we see something, and then we ask, we don't try to put this too theoretical. We see something concrete. The next question we ask is, are there companies which can positively contribute to overcoming this? Because we are an investor, we are an asset management house. So when we don't have the opportunity to invest in companies which can contribute positively to this, we can observe the problem, but we cannot overcome it because we cannot do so much about it. And so only when we see this, and we have, clearly we started on the financial sector side. Very often people ask, why did you start with microfinance? We started with microfinance because it is access to finance is an issue, and it still is. And there is, and here's very important, there is an investable universe of companies, because otherwise I cannot go to the investors here in Europe and say, look, I have an investment opportunity, because you need to have a universe of companies. Otherwise, it's not an investment topic as a theme. And so we start from something concrete problem and the investable universe. And then we ask, can we combine it with the investor interest? Because it doesn't help if we have something, but unfortunately, let's say the returns or the risk or so are not in line with what investors are looking for. So only when we can bring this together, then for us, it is basically what we call an impact strategy and an investable theme, because otherwise it's more talk than anything else, because we cannot bring all these elements together. And so in each of our offerings over the whole company lifetime, in the more than 20 years, each of our offerings had a very clear impact narrative. It's very clear what we want to achieve. For example, in simple words, I could say, we want to contribute to a more inclusive financial sector development where more people are included into this opportunity, having access to financial services. That's the thinking. And therefore, we are financing institutions which contribute to this positively.
When you started, it was microfinance. I guess today we would call that financial inclusion. It's a bit broader now. When you became CEO, you also established climate finance and sustainable food as themes as well. So is it correct that you have basically these three themes?
When we started the company, we never identified ourselves as, we are microfinance. We always said, look, there is a variety of challenges out or problems. Which one are investable? And we started with the topic microfinance, and not only us, others also started with microfinance because it was, if you want so, the best developed opportunity at that point in time. And it was risk return wise something which you could actually do because other sectors were not yet there. Over time, from the very beginning, we also financed along the agriculture value chain. It's not so well known, but in the first fund already, which we launched, it always had from the very beginning some agriculture investments in it. Yeah. So financing smallholder farmers is one of the topics there. Yeah. But it's true. Today, we talk about, or the company works with three big impact themes: financial inclusion, in today's terminology, sustainable food or sustainable agriculture, sustainable food, and climate finance. And when we see climate finance, we basically have three things in mind. It's access to clean energy. It's mitigation, climate mitigation, so reducing, let's say, CO2 emissions or GHG emissions, and adaptation to climate change. And the climate topic came up already like more than 10 years ago. We started back in 2012 with climate finance, when we took over a fund mandate on energy efficiency. But of course, this has developed over the last couple of years dramatically because the awareness about the climate challenge, problem, situation, whatever the right wording is, which we are in, I think has developed quite a bit over the last 5, 6, 7 years.
Changing the subject slightly, something has happened in the United States during the last few years that seems to have produced a strong backlash to ESG. Meanwhile, in Europe, ESG is becoming more and more mainstream. How are you addressing this ESG backlash, given that ESG is so integral in your investment strategy?
This is a good news here. This is, so to say, the good thing about this is because this is really about people who promote ESG filter, and sometimes even they mix it up with impact, and they do it even mostly in public markets. So guys, if you would have thought already beforehand a little bit about it, you would say, that thing is not as you think. And I clearly understand the critique. The discussions went all over the place. People positioned this, in my view, very wrongly, but people got enthusiastic about it and money flew into this and they thought, okay, I do a good thing. And now, so honestly speaking, we are not affected by this because people, when they invest with us, they understand, look, this is a very different world. I mean, we are doing private market. Every investment doesn't come because it is high in an ESG score. ESG is just a risk analysis, which we do. It's high on an impact thesis. And these are hand-picked companies in emerging markets. And I can say, and therefore I'm saying investors, all type of investors get that very clear. This is different. This is a different thing. And therefore, yes, we see other type of challenges. For example, these days, I mean, look at geopolitical environment, look at interest rate, all these type of things are, for what we do, impact in emerging market, not the easiest selling point. You can imagine. That's a real challenge. But that ESG flows now in a different directions, not so much inflows, even outflows and so. Yeah, but that is in a completely different type of funds, which is not the world where we are basically. I'm about this. I'm observing this. I can clearly see where is it coming from. I can sometimes only say congratulations. Like this is now, and it's basically some people understood how things really are and say, okay, this is different from what we thought. but it doesn't touch what we do. It's really something very different what we do.
How do you see the difference between Europe and the US? What you described about the US, it's not happened in Europe. I mean, there's a little bit that I see, but not.
I'm not the expert, but what I'm observing is not surprising me, because in the US, you have very different trends and the view on things driven by, return. My opinion is it's a very big mistake from my perspective when people go out and say, actually, I offer you a fund investment with ESG criteria. And because I'm using my ESG filter, return can be even better. I think this is just doesn't make sense, the sentence, because it can, of course, when you look ex post, there can be a time period where a certain fund with an ESG filter performs better than a non-ESG filter fund. But in the longer run, this will not be the case. There can be always times where this is like this or this is the other. But I think the positioning of these type of things, that ESG is an important thing to apply. Absolutely. I think one should not take ESG as any indication for impact. That's complete nonsense. It doesn't make sense. The other problem with ESG is, of course, what companies like MSCI, others do, and I'm just saying, look, that's what they do and what people buy, but I can't see the value of this, because when you add up criteria and say, now I have an ESG score, what is the relationship between an environmental friendly company which is doing something good on environment and having a board of directors which is more or less diversified? Also, you cannot add up these things. Yeah, so I have strong doubts conceptually on this, but I don't have doubt that each of the categories can be analyzed. Of course, they can be analyzed, but it makes much more sense for investors, for example, to say, okay, I'm interested in governance and in diversity, for example. That's my interest. Then I have to look specifically at how does a company score on diversity, for example, if I'm interested in this. And then I can take my decision. But it doesn't make sense to add this up under an ESG score, because these categories, I'm comparing all over the place. That to me doesn't make sense. But I'm probably a bit too kind of conceptual there. But I would not recommend. And I think specifically linking this and to saying, from this, I expect better performance. I personally would be very careful in doing this, because it doesn't mean, for me, logically, it doesn't make sense. But I'm probably a bit critical.
You've been around since the very beginning, I guess 30 years ago. Looking forward, what themes are you the most excited about within these markets that you're working in?
The need is still out there. There is a lot of growth. We have, don't forget, when you look just a bit longer term, the demographic changes which we can expect. Also, there's a whole topic, I won't go into this migration topic, but all is related. And it means there is this need, to develop these countries further at the end for global stability. And climate is, of course, is a big part in this equation. So all of the things we are doing is, I think they all point absolutely in the right direction. These are required developments. And this, still excites me as it excited me 30 years ago, and say, okay, I see these needs. What can be done about this? And what can we basically provide? I mean, I am not of the opinion we cannot change the world easily, but can we contribute to a certain extent? That is the question which we are asking. And what we do hopefully with our product offering is this, to make it also accessible for investors here, that these topics are also accessible and where the funding can contribute in the right direction. That is already a good thing.
You've been listening to SRI 360. If you enjoyed it, please hit the like button and subscribe to get future episodes. You can find an archive of all previous podcast interviews and more articles and information on SRI, ESG, impact investing, sustainable investing, and socially responsible investing at our website, sri360.com. If you'd like to read more lessons learned from world-class SRI investors, get a copy of Scott Arnell's book, Sustainable and Responsible Investing 360. It's a must-read for anyone wanting to know more about investing for positive social, environmental, and ethical impact. all with market financial returns. These are the stories and tactics of those leading the way as sustainable and responsible investing goes mainstream. Sustainable and Responsible Investing 360 is now available in hardcover, ebook, and audiobook format wherever books are sold.